Earlier this morning, what we chatted about, actually three messages that came out from our colleagues on the panel and also the audience. One is it looks like the Namibian story could follow or similarly track Guyana. And if that's the case, there's a few things that we probably need to get right already now, given the speed at which Guyana unfolded. And then secondly, there's this balance that we need to achieve from a resource scarce risk versus possibilities of, broad shared prosperity that could come from this oil and gas windfall. And then lastly is balancing local content and investor confidence in these early stages. Like you could go full gas about local content and then scare investor away, or not actually achieve local content and then the broad participation doesn't happen. So these were the three sort of messages that we kind of distilled earlier today. There was great confidence in that we've got great track record as a country dealing with natural resources from our mining, portfolio. And there are lessons there that, some things that we've done very well. As a financial services sector, we are much more developed than Guyana was at the time they, discovered oil and competitive advantage. So we are certainly somewhat ready. There's a lot of big things that we still need to get right. We need to make up our mind what do we want to achieve under local content. How do we want to work with the international community? I think there's a few of these things that we need to check out, but I think they're somewhat ready as a financial service in the country. So readiness means that day one, we are able to participate in an increasing manner. So there are certain capabilities that this country and the sector has today, and it should be able to play to that strength day one. And from then on, there's a clear path to how we increase our participation into that. It does not mean, on the contrary, that we should wait for that day when all the ducks are in the row. We can do everything and all the things that they do in the financial hubs of the world. It means using what we have now to get started and get to first oil, but with a commitment that we will continue to increase our participation in these opportunities. So that's readiness for us. So, and in that, there is the panel, we also concluded there's an old saying in deal making that time wounds all opportunities. So the longer we keep iterating, the less likely it is going to be that we'll be successful at what we're trying to do. And I think this is where Namibia probably already has some experience. So we are a natural resource dominant economy. We've made most of our money from mines. And these mines are in the southern part of the country, some now in the western parts of the country. And we've been able to use some of these resources to develop infrastructure to enable entrepreneurs to spring up and do other things in the economy. And the way we see local content therefore happening is that rather than making it as a handout mechanism that the government collects taxes and then kind of gives people some money, we think if you create an enablement infrastructure that, for one, from a regulation point of view, international players are encouraged and also rewarded from a contract opportunity perspective to partner the locals, but the locals must bring their part to these opportunity sets. Then you create long-term sustainability. They would be entering these joint ventures at partnership level rather than this, you just tag along for the sake of compliance. This is the capacity opportunity that we see. But I think as a country, we've been there in some shape or form. Of course, oil and gas is big as multiples of what we've seen before. But I think we can trust ourselves that we can do some of these things already. The first thing that we believe local banks need to bring to the game is firstly, they need to come with skill. And the skill should enable banks to structure for the opportunity that's in front of them rather than relying on traditional models, collateral heavy, looking for big balance sheets. They should come with really smart, intelligent bankers that can look at commercial opportunities and structure following the cash flows underlying that. This is one thing. The second thing is banks have to support enterprise formation. Now, oil and gas is new. A lot of the activities that needs to happen to support oil and gas are going to be new. They need to be scaled or started afresh. And you need to back that enterprise formation by crowding in other capital. Banks have some money, other, pools of investors have other money. You need to be able to crowd all of these together. Exactly, to blend a little bit of the capital structure and then be able to support it. But then lastly, what banks do anyway, they need to take risk. You need to take risk alongside the international technical teams or the IOCs and the OFSs so that they can help you understand the technical side of things and you bring the financial side of things. And together with the local partners, you can actually back some of these ventures.